The institutions are taking over, and if you sell your XRP today, you might never be able to afford to buy it back. That just sounds like another piece of the internet hype, doesn't it? Another person telling you to hold forever while the price bounces around and your nerves start to fry. But something actually changed this week, something fundamental. You see, while most people were just looking at the price charts wondering why we aren't at $10 yet, the builders over at Ripple and the developers on the XRP Ledger quietly moved to the finish line. See, they aren't just building a payments system anymore, they are building a replacement for the global banking core. And they want your XRP to be the oil that greases the gears. Now, if you've been watching the news, you've probably heard the phrase native lending. Now, it sounds rather boring, doesn't it? It sounds like something for accountants. But in the world of crypto, that phrase is actually a little bit different. It's the difference between an asset that you trade for a quick profit and an asset that you actually keep for a lifetime of wealth. Now, the warning that I have for you today is actually quite simple. The big players, the ones with the suits and the ties and of course those trillion-dollar balance sheets, they are not coming for the hype. They are coming for the utility. And once they have it, they are not planning on letting it go. Now, we do need to talk about why some of the most respected voices in the space are now saying that you should never sell your XRP. And it's not about being a fan of the project. It is simply just about understanding a shift in how money itself works. We are moving from a system where you put your money in a bank and they pay you nothing, to a system where your XRP, it acts as the bank itself. If you sell it now, you're basically selling your shares in the future of the world's financial plumbing. Most people get into crypto to make a quick buck. You see a green candle, you get excited. You see a red candle, and you panic. And that's exactly how the institutional players want you to feel. Right? They thrive on your impatience. They love it when you get bored. Because when you get bored, you sell. And when you sell, they are right there, waiting in the open, or at least with an open hand, to catch every single drop that, well, you let go. Just take a look at the history of how big banks actually operate. They don't gamble, they don't moonbag, they build infrastructure. While the average person has spent the last few years arguing about whether XRP is a security or a commodity, Ripple has been busy signing deals with central banks and massive financial institutions. But the latest development is a little different. The introduction of native lending on the XRP Ledger, it changes the entire math of holding this asset. I mean, think about what happens when a bank needs to move some money. Right now, it's a bit of a mess of intermediary banks, fees, and of course delays. XRP was designed to fix that. But if Ripple adds a native lending protocol directly into the ledger, it means that these institutions can borrow and lend assets without ever needing a middleman. They can use XRP already sitting in the system to facilitate massive trades. And here is the catch. They need the liquidity. Right? They need a deep pool of assets to make all of this work. Now, if you are one of the people providing that liquidity, then you aren't just a holder. You are the infrastructure. Now, this is the warning, right? Because we are seeing a massive shakeout right now. The volatility that we see in the market is designed to make you question your thesis. It's designed to make you think, maybe I should just take my 20% profit and run. But the institutions aren't looking for 20%. They are looking for the next 100 years of global finance. If you let go of your position right now, you are exiting the game right as the real players are stepping onto the field. Let's break down what this native lending actually is, without getting lost in the technical jargon. Imagine that you have a gold bar. In the old world, if you wanted to get a loan against that gold bar, you had to go ahead and take it to a bank. You had to pay them a fee, and you had to let them hold on to it. Now, on the XRP Ledger, with these new protocols, the bank is just the code, and it lives on the ledger. So when Ripple talks about institutional native lending, they are talking about creating a massive marketplace where huge sums of money can be moved and lent out within seconds. Now, this isn't like the decentralized finance, DeFi, that you see on other chains that are prone to hacks or rug pulls. This is built directly into the DNA of the XRP Ledger itself. It is native, which is meaning it is part of its foundation. It's safer, it is faster, and it is designed for the scale of a global bank, not just a group of hobbyists. You see, the pure pundit that we are actually looking at today, who says never sell, is actually pointing to this very specific feature. Why would you sell an asset that can generate a return just by existing? Now, in the traditional stock market, people love dividend stocks. They love the idea of getting a check every single month just for owning a piece of a company. Well, XRP is evolving into something even more powerful. It is becoming a productive asset. You see, if the institutions are going to use the XRP Ledger for their lending and their borrowing, well, they need to have the ledger and they need the ledger to be stable and, of course, liquid. They aren't going to just dump on you. They are going to be looking to use the system. Now, this creates a floor for the asset that, well, to be honest, we've never really seen before. We've spent years talking about price targets. It should be $5, $10, $50, but, those questions, they are actually starting to become kind of irrelevant. If the asset gives you a steady stream of yield because the world's banks are using it to settle their debts, then what is the price of the asset actually worth? It's actually priceless. See, you don't sell the goose that lays the golden eggs. You just keep the eggs. We have to look at the who in this story. Who is actually pushing for these changes? Now, it isn't just a few developers in a basement. It's Ripple, a company that has spent years cultivating relationships with the IMF, the World Bank, and every other major central bank on the planet. Now, they have been playing the rather long game. While other crypto projects were focused on meme coins or NFTs, Ripple was focused on compliance and regulation. They know that the only way to truly take over the world's financial system was to play by the rules, or, better yet, to help write those rules. Now that the regulatory fog is finally starting to clear, we are starting to see the results of that strategy. The institutions are no longer studying the technology, they are actually implementing it. Now, you might notice that the news doesn't always reflect this. The headlines are often kind of filled with fear, uncertainty, and doubt. You'll hear about lawsuits or delays, but if you look at the on-chain data, you do see a different story. You see large wallets, the whales, getting even bigger. You see the number of XRP held on exchanges dramatically dropping. Now, this is the silent accumulation. The big money is moving its XRP into cold storage or into these new protocols to prepare for what is coming. The warning here is that the media often acts as a distraction. They want you focused on the noise so that you don't see the signal. The signal is that the ledger is becoming more functional every single day. Every new proposal, like XLS-66D, which focuses on these lending traits, is a kind of brick in the wall that will eventually lock retail investors out of the cheap prices. Once those institutions are fully plugged in, the days of buying XRP for less than a couple of dollars will definitely be a distant memory. It's kind of like the days when you could buy a house for $10,000. Before we go any deeper into the how and the why, I do have to just pause here for a second to let you all know that I am not a financial advisor. This video is for entertainment and education. The crypto market is volatile, you may have noticed, and you genuinely could lose everything. It's very important that you do your own research, and if you can, consult a qualified professional, because I am not a qualified professional. At the end of the day, your money is your responsibility. Now, if you are sitting there thinking, this is an awful lot to take in, then you are right. The world of digital assets moves faster than almost anything else in history, and that is why we have created a community where you don't have to figure it out all alone. Now, we do have a free educational Discord where we track these institutional moves in real time. It's a place to talk to other people who are looking at the same data points and trying to navigate this transition. The link for the Discord and the open invitation is in the description below. And if you are maybe one of those types of people who wants to go beyond just watching some videos and actually master the mechanics of how all of the kind of blockchain world works, then actually you want to head over to the 𝗗𝗶𝘀𝗰𝗋.com. Again, the link is in the description below. We have structured courses, some free, some paid for, that are designed to help you navigate the crypto world. Everything from crypto safety, because unfortunately this place is full of scammers, through to blockchains 101, to portfolio management, risk management, and even understanding some trading tools such as Elliott Wave or smart money concepts. There's a lot of courses, and we're adding even more as we go into 2026, so it's well worth checking it out. Kind of where we do provide these structured learnings and deep dive courses on all of the very important stuff. Now, you can find it all over at 𝗗𝗶𝘀𝗰𝗋.com, and like I said, some is free, some are paid for, and I'll also drop a 50% off coupon code into the description down below for any of those paid courses, just because you are watching this video here. Now, the reason that we focus so much on education, it is because in the market, or this particular market, knowledge isn't just power, it's kind of survival. If you don't understand what you own, then you will be shaken out by the very first 10% drop. But if you do understand the why, then you can just sit through anything. Let's get back to the warning. To understand why native lending is such a shift in the foundation, we have to look at the problem that it solves. The world is currently facing a massive liquidity crisis. There is plenty of money in the sense of digital numbers on a screen, but moving that money across borders is incredibly expensive and rather slow. Now, this is known as trapped capital. Banks have to keep trillions of dollars sitting in Nostro and Vostro accounts all over the world just to make sure that they can cover payments. It's kind of like having a whole bunch of different wallets for every store that you visit. But you can't really move the money between them. It's inefficient, and it costs the global economy billions of dollars every single year. Now, XRP, it was built to be the bridge. It allows banks to move value without needing these pre-funded accounts. But native lending, it takes it a whole step further. It allows that value to be productive while it's actually waiting to be moved. Now, it means that instead of money just sitting idle, it can be lent out to facilitate other transactions on the ledger. Now, when a pundit tells you to never sell, they are looking at a future where XRP is the most liquid, the most useful asset in the world. Now, in that scenario, they would, why would you ever want to sell or trade, that for fiat currency like the US dollar? Which of course is losing its purchasing power every single year. See, the institutions, they know that the dollar is like a melting ice cube, right? They want to move their wealth into assets that are tied to the actual utility of a global economy. XRP is that utility. We often talk about the XRP Ledger as if it is a database, but it's actually more like a living organism. It evolves, and the evolution that we are seeing right now is the institutionalization of the chain. When Ripple first started, it was all about XCurrent and XRapid. Now, they were trying to convince banks to use this technology. Now they don't really have to convince them as much. The banks are coming to them because the old system is breaking. The revelation is that the XRP Ledger isn't just a payments rail, it is becoming a decentralized central bank. Now, if you can lend, borrow, swap and settle all on one chain, then you don't need the traditional banking stack. You don't need the layers of bureaucracy that have defined finance for the last 100 years. It's this that is what the big players are actually afraid of. But it's also what they are racing to try to control. Now, the deep, dark hole of this story is the realization that if we do not hold our own assets or own our own assets, the institutions will eventually own the entire ledger. Now, they will be the ones providing the liquidity, and they will be the ones earning the fees. The warning is that this is the last window of time where regular people can own a significant piece of this particular infrastructure. Once the protocols for institutional lending are fully live and the big money starts flowing in, the price of admission will go through the roof. You've probably heard people say that crypto is a scam or that it has no intrinsic value. Now, these are the very same people who said that the internet was a fad or that nobody would ever buy anything online. They are focused on the what instead of the how. The intrinsic value of XRP isn't in the coin itself, it is in the ledger. It's in its ability to move any amount of value anywhere in the world for a fraction of a penny within 3 seconds. Now that is a service that the world desperately needs, and as we kind of add more features like native lending, that value only grows. But the psychological toll is on you, the holder, and it is rather high. You see, you are essentially betting against the status quo. You are betting that the old way of doing things is actually dying out. That can be a rather lonely place to be. You'll see other coins pumping 100% in a weekend, and you're gonna wonder why you're holding XRP. You'll see critics on TV calling it a banker's coin as if that is a bad thing. But as you ask yourself this, do you want to bet on a meme that relies on the next person being a bigger fool than you are? Or do you want to bet on the bankers? History shows that, for better or for worse, the bankers usually win. They actually have the resources, they have the connections, and they have the long-term vision. By holding XRP, you are essentially front-running the very people who have controlled the world's wealth for centuries. Now, they don't like that. They will do everything in their power to make you sell before the real move happens. We need to talk about what never sell actually looks like in practice. It doesn't mean that you never use your wealth. It means that you change your relationship with it. Now, if you own a house, you don't sell it every time the housing market goes up 5%. No, you live in it or you rent it out. You use it as an asset to build your life. XRP with native lending becomes that house. You don't sell it for a profit. You use it to generate the rent. Now, just imagine a world where you can take a loan against your XRP to buy a car or start a business without actually ever selling the asset, because the ledger is native and transparent. The terms of the loan are very clear. There is no hidden fine print there. Now, there is no banker who can decide to change your interest rates on a whim. Now, this is the secret success that the institutions are building for themselves. They want to move into a world where they can borrow against their own digital assets to fund their own operations. The warning is that if you sell your XRP now, you are choosing to stay in the old world. You are choosing to stay in the system where you are the product instead of the owner. The pundit's advice isn't about being loyal to Ripple here. It's about being smart with your capital. It is about understanding, or you understanding, that the world is actually moving towards a tokenized economy where everything from real estate to stocks will live on a ledger. Now, when you realize that the ledgers themselves are the most valuable real estate in the world, and the XRP's ledger is the prime kind of beachfront property for the world finance. As we move towards 2026 and beyond, the pieces are falling into place. The technical proposals for institutional lending aren't just ideas. They are being coded into the software right now. The partnerships are being tested, the regulatory frameworks are also being built. We are standing at the edge of a massive shift. It's the transition from the speculation to utility. Now, in the speculation phase, prices are kind of everything. In the utility phase, access is everything. The warning is quite simple. Don't let the short-term noise steal your long-term future. The institutions are taking over, but they can only take over what you are willing to give them. If you hold onto your seat at the table, then you get to participate in the new economy that they are building. If you sell, well, you are just another person who almost made it. Now, we see this pattern over and over again in history. From the very early days of the railroad to the rise of the internet, the people who got rich, they weren't the ones who traded the news. They were the ones who recognized a fundamental change in the infrastructure and refused to let go of their stake in it. Now, XRP is that infrastructure. The native lending protocol is the killer application that makes it indispensable for the biggest financial players that are on the planet. They need it, they want it, and they are hoping that you are too tired, too bored, or too scared to keep it. So, what do we do with this information? First, we stop looking at the price every 5 minutes. The price is just a distraction. Look at the developments, look at the proposals on the ledger, look at the institutional shift that is happening right in front of our eyes. Second, we educate ourselves. This is a complex world, and the more that you know, the less likely that you are to make a mistake. Join the community, get into the Discord, and if you really want to understand the why, spend some time over at 𝗗𝗶𝘀𝗰𝗋. Surround yourself with people who are looking at the bigger picture, not just in the next 24 hours. Third, we do need to make a plan. Never sell is a great mantra, right? But you also need to know how you are going to use your assets when the time actually comes. Are you going to provide liquidity? Are you going to participate in the lending pools? Now, these are questions that we should actually be trying to ask ourselves now, so that we are ready when the institutional takeover is complete. The warning has been issued here. The institutions are moving in. The ledger is evolving. The only question left is, will you be an owner of the future, or are you just going to be a spectator? Now, the choice is yours, but remember, once you sell, there might not be a way back in. This is the moment where the strong hands are forged. We are moving into a new era of finance. We will see you there, of course, but for now, what you can do is hit that like button, subscribe, and watch the video that's queued up on the screen right now.